Right, morning everyone. Welcome back to our morning kappa at 8. Sorry for the slight delay here. Okay, so let's look at the Hang Seng Index as of yesterday, right? The Hang Seng Index continue to edge higher. It made a 20 points gain yesterday. But you look at the yesterday candlestick, right? Instead, compared with the what we see for the past at least 10 trading sessions. Yesterday was a very narrow body candlestick and with a very long upper and lower shadow, right? It shows that in the Hong Kong market, right, sentiment remains a bit cautious as it's approaching the 20 and 50 days moving average. Now, just to recap, what we have discussed a few days ago, right now overall the Hang Seng market looks stabilized. Now initially it experienced a corrections due to the fear of the air bubble, right, in the Hong Kong market, right, and then on it make a rebound from this 25,000 point level, right, but as of recent three sessions, now we have yet to see the tech stocks to lead the market higher. Now, in fact, for the past three sessions, I would say that the contributions are mainly from the insurance, pharma, and also the banks sector. So as we aware that right now the world is the East and West is going for this AI race, right? And tech stocks are usually at a higher beta, more volatile, right? But during the last 10 sessions, the tech stocks in the Hong Kong market seems absent, hibernating right now, and that's actually posed a bit of downside risk on the Hang Seng or the Hong Kong market. So right now we still keep a bullish bias, but we keep our stop loss at 25,000 point. Now, when you are looking for the Hong Kong market, the preference will be on the big cap blue chip stocks, especially the tech and the bank sector, or you can actually look at the telco sector, what we have shared yesterday on the China Mobile, right? And as of the US market, right, overall is stabilized. Last week, I managed to climb above this 6,006 point level, right, heading towards the 50 days moving average. And as of yesterday, right, the momentum followed through. But right now, the market is actually discussing whether Google will have perform better than the Nvidia. Now, another counter that I like to bring to your attention is for the past 1 week, right? I do see that strong, very nice trading opportunities on the alphabet, i.e. GOOGL, right? You can see that the Google have been charting a higher high. Now, since last Friday, it closed higher, and then on Monday, it gap up, and on Tuesday and Wednesday, it just consolidate around the R1 and R2. So based on the technical setup right now, as we can see the price and volume profile, the strong support level should be somewhere around at 250 US dollar. So as long as stay above here, right, the counter should move on a higher high basis. Now, meanwhile, the other counter that I do see that testing a very strong support level is Amazon. You can see that the Amazon AMZN managed to bounce off from the support level 220. Right now, if we follow through and break past the 230, and then on the next R1 will be at 245 and followed by the R2 at 260. Okay, so this recent price actions just tell us that the support remains intact, and overall the setup remains bullish so far. Now, although we have been bullish for the big cap in the US market, we do have a bit of a cautious on the downside, as well we can see that recent this counter Oracle, right, that has been undergoing a corrections, and for the last 6 days, I think one piece of news have actually broke up, which Oracle CDS have shot up recently, and look at the Oracle chart, undoubtedly, right, the stocks right now is below the 20 and 50 days moving average, and as of the yesterday remains below the 200 days moving average. So that shows that the bears have the technical advantage on the Oracle right now, right? And I think on the before we end the year, somewhere in the middle of the December, right, Oracle is going to have their quarter results. So before that happens, right, I think for the next 2 weeks, what we need to see is that whether Oracle can climb above the 200 days moving average, especially after yesterday night, the gap up price actions are over here. So if tonight Oracle can follow through and climb above 210 or even break past the 228, right, then I believe, right, market will have been more risk on sentiment. Alphabet and uh, uh, Amazon, right? Google and Amazon could move higher at this evening. Okay, as for the FKRI, I managed to bounce off the 50 days moving average yesterday, follow the trend, the bullish sentiment on the US market overnight, right? And we keep a bullish bias on the FKRI. Now, as for FCPO, right, after falling below the 4,000 mark, it staged a counter trend rebound yesterday and climbed above the 4,000 psychological level again. But overall, the setup remains bearish so far for the FCPO, which with the support remains with resistance remains intact at 4250. So as for the trading stock this morning, we'll be looking at the farm price, which yesterday managed to break past 44 cents resistance on the back of a high volume. So riding on this momentum, farm price will be testing R1 at 48 and followed by R2 52. And then on downside support, we mark at 41 cents. Secondly, we have a Northeast Group, which will break past 76 cents and half on the back of a high volume. So after the breakout, Northeast will be testing the neck resistance at 83 cents and followed by 90 cents. Downside supports market 71 cents and half. So we have two breakout stocks. Firstly, the farm price, and secondly, Northeast Group. So I'll stop here and pass on Hilmi on the ROI note. Thank you.
Great. Thanks, Joseph. So good morning, everyone. So here's a quick update on IOI Corporations for the first Q FY 2026 results. For summary, we are maintaining a buy call with a higher SOP base target for price of 4.75 ringgit, which implies 17% upside and about 2.7% FY 26 yield. So results were broadly in line with core earnings 26 to 1027 of full year forecast and a solid 90% year-on-year growth in core net profits. On the operation sides, the FFB output rose 2.3% year-on-year, which is slightly below our expectations. But importantly, for the 4 months 2026 growth, it has improved to 4.7%. So it keeps the management comfortable with its 3 to 5% fully guidance. Hence, we maintain our 3 to 4% FFB growth assumptions for FY26 and FY27. For the CPO average selling price, it's remained competitive at 4,169 per ton in first Q 2026, which is up 3% year-on-year, while palm kernel prices jumped 31% year-on-year. So we believe that IOI continues to benefits from its forward sales strategy of the 2 to 3 months. For the unit cost-wise, it was stable at ranging around 1,800 to 1,900 per ton, which performed better than expected given the higher fertilizer prices. IOI also has already locked in about 60% of its FY 2026 fertilizer requirements and expects improved productivity to offset the cost pressures. So we therefore leave our cost assumptions unchanged. For the downstream divisions, it also showed a meaningful recovery, swinging back to profitability with 2.9% core EBIT margin. Thanks for two reasons. First is thanks for two segments. The first one is refinery, and the second one is oleochemical segments, which turns positive. The refining margins remains competitive due to Indonesian supply, but IOI see new customer wins and stronger volumes in oleochemicals. Meanwhile, contribution from specialty fats remains robust with 34% Q-on-Q PBT growth, supported by strong cocoa and butter equivalent margins. And lastly, we have raised our CPO price assumptions to 4,250 for FY 2026 and 4,100 for FY 2027. And similarly, we also revised PK price assumptions. As a result, our earnings forecast for FY 2026 to 2028 increased by 4 to 6%. So overall, IOI remains attractively valued at 7.3 times 2026 PE, which is at the low end of its peer range, which is somewhere around 16 to 20%. So with the improved upstream performance, with stabilizing downstream margins and supportive commodity prices, we maintain buy with a high TP of 4.75 ringgit. That's all for me. Let's proceed to the next speaker.
Thank you very much, Hilmi. This is Vanessa from RHB Warrant. So I would like to just share with you on how do we actually identify a warrant. So if not mistaken, yesterday Jaya has actually announced their quarterly result. So for bullish investors, you can definitely look at some of the warrants. Okay, so how do we actually looking at it? So first, you have actually chosen a warrant, or I would say the underlying that you're bullish on. All right, so the next thing you have to identify the breakout price, or maybe the price that you want to enter the position. Okay, so with this, after this, then you have to look for a good warrant, because not all stocks they have a structured warrant or call warrant if you're bullish on. All right, so maybe I can just add a little bit of information over here. Okay, so how do we actually choose what kind of warrants, what kind of underlying stock to issue a warrants on? First thing, it has to be listed on the main market. Secondly, it has to be the market cap has to be 500 millions and above. All right, so for IPO counters, it has to be 3 billions. All right, so for example, you actually able to see many call warrants over EcoShop. For example, EcoShop Berhad after 2 weeks after the IPO listing. So it is because the market cap is more than 3 billion. So we are able to issue a new call warrants or put warrants over this specific underlying. All right, so okay, so come back to this. All right, so you have to identify a good warrant. So how do you actually look at a good warrant? It has to be with a lesser ticks of sensitivity. So it means that the sensitivity is quite good. It moves very fast. So if you are a short-term intraday trader, then you can definitely look for something that has a lower ticks of sensitivity, lesser ticks of sensitivity. All right. On the other hand, high effective gearing. So because we want to make more money. Okay, so the effective gearing has to be higher. And last but not least is to use the price matrix. All right, so this is an example for Kerjaya. All right, so there's so many Kerjaya warrants in the market. So definitely for me, I would definitely look at RHB first, because RHB warrant, right? Okay, so I will look at well balance of sensitivity and also effective gearing. So sensitivity, in this case, at one glance, I will be able to identify those with 1 ticks to 2 ticks would be quite a good choice. All right, and then after I look at the ticks, as long as it's not too overboard, right? It's not overly too sensitive or overly too not sensitive, then I will look at the next thing is the expiry date. So sometimes it looks very good because it's very near to expiry, like 2 weeks later or maybe 2 months later. All right, then the next thing, last but not least, I will look at the bid price. Okay, so the bid price cannot be too expensive. So when it's very expensive, that you know that the gearing effect will not be as good. Okay, but so for example, you have identified Kerjaya C6. It has been a very popular Kerjaya warrants the past few days. Okay, so if you are still bullish on it, then Kerjaya C6. Yeah, so on your on the right hand side, you'll be able to see this on our price matrix for Kerjaya C6, the call warrant. All right, so this screen will be available on RHB Warrant website. Okay, so this price matrix is going to help you a lot. So you can actually use this when you want to trade Kerjaya underlying share, right? And then you want to have a bit of extra exposure on Kerjaya call warrant, then you can use this to identify what is the entry price and exit price for Kerjaya C6. C6 is the call warrant lah. Yeah. So this also can help you to plan how to exit, because once you have entered, then on the same day, the price matrix will not change. So the price matrix might change the day after. when the price move, we don't call it change because the price move up and down, but it change maybe you actually notice the changes in the sensitivity. Maybe it could be like, now it's like 2 ticks, right? Maybe tomorrow we'll see 3 ticks. And then what's most important is that the time decay. Okay, so if you hold onto a warrant for too long, you will be experiencing time decay in the warrant. We call it time value or time decay lah. So it means that the value depreciates day by day. All right. So you will see today JTS looks like this, the metrics, and then tomorrow maybe 1 ringgit 18 cents, it has become 6.5 cents, even though JTS mother share does not move. All right. So these are some of the information and also some understanding that you need to know before trade structured warrants. All right, so thank you very much. I'll pass the floor to Adam. Thank you.
Okay, good morning, everyone. So today we have a results review on Kerjaya Prospek. So Kerjaya Prospek announced its 9-month 2025 results, which saw its core profit reach 158 million ringgit, which was 52% year-on-year higher. And this not just beat ours, but also Street's projections, making up 88 and 89% of ours and Street Food's projection, which is a very, very good number. And just for context, for the whole of last year, Kerjaya was making about 168 million ringgit, and in third quarter, and for the 9 months of this year, it has locked in about 177 million worth of profit. So that is very, very good, and the reason for that is the improving construction and also the property arm. And if you look at the construction arm for the third quarter, PAT was stronger by 52% year-on-year also, and margins were strong at net margins were strong at 13.9% compared to just around 9% a year ago. Similarly, the property arm saw its PAT triple due to the higher progress billings coming from the 2 existing projects that have a cumulative GDV of 800 million ringgit. So also yesterday, Kerjaya announced that it secured a new job worth 351 million ringgit, which is its 11th job win for FY25. And in terms of year-to-date new job wins, now it has reached to 1.6 billion ringgit, which actually matches our FY25 job replenishment levels. So that is good. But for now, we are leaving our job replenishment assumptions unchanged because we understand that the trends for job awards in the end of the year tends to be very quiet. But however, we do note that any potential industrial job win, for example, semiconductor facilities or data center jobs, could be some form of new catalyst if Kerjaya were to secure any, given that the last industrial job that was involved in was back in October of 2022 via a collaboration with Samsung CNT, whereby Kerjaya had a 30% share from a 1.5 billion job for Texas Instrument in Malacca. So that is something worth to bear in mind for Kerjaya Prospek. So all in, given that earnings exceeded our expectations, we are revising our FY25 to FY27 estimates by 14% for all the 3 years by accelerating some of the progress billings for the property and construction projects. So with that, we arrive at a new target price of 3 ringgit and 35 cents, previously 3 ringgit and 15 cents. We view that Kerjaya still has a lot of potential to go higher than where it is trading now. Now it's at 17 times PE. We believe that it can go higher, not just from any catalyst from the industrial side of things, but also due to the resilient or very bright prospects that is coming from Andaman Island, whereby Kerjaya has secured easily 2 billion worth of projects since 2018. So this Andaman Island would need probably another 10 to 15 years to fully develop. So that may continue to benefit Kerjaya Prospek in the long run. So that's it from me, everyone. Thank you for dialing in for today's call. We'll see you tomorrow at the same time, same place at RSB Morning Kappa at 8. Thank you and have a nice trading day.